On Thursday, I posted a video at 4 a.m. discussing the possibility of institutions dumping shares of AMC onto the market and causing some wild up and down price action. 3 hours later, AMC announced it had sold another 11.5 million shares through Citigroup and B. Riley Securities, and the roller coaster began. Now, I just threw out the idea because it's one of those things investors need to be emotionally prepared for, but I don't think anyone expected more shares to come directly out of AMC. The week ended with hedge funds on the attack, and just when you thought sentiment was reaching a new low, CNBC stepped in it and got everyone excited all over again. Let's talk about this new sale of shares from AMC. Let's talk about naked shorts, and let's get to it. What's up YouTube, James from Thursday Media here, and in this video we're going to try to sort out some of the mess and data that started appearing on Wednesday of last week. All eyes are on AMC. The news media can no longer ignore it, investors are taking note, and those of us that have been holding and buying for months will soon be enjoying a free popcorn. Momentum started building at the beginning of the week and began pushing the stock higher into the 30s. AMC announced its shareholder program, AMC Investor Connect, as a way of communicating directly to its large retail investing community. The program already has a site set up and promises to make special offers to those holding the stock in AMC. And while I don't have any special offers on this channel, I do have a special like button that you can hit so that YouTube knows that we're still in the game. We saw the trend continue up, and then we saw a huge jump and push throughout Wednesday. The stock rallied and was halted several times and ended the day at a near 100% gain. In the after hours and early pre-market, the price of AMC started floating close to $80, and it looked like Thursday was going to be a continuation of that rally. But that changed when AMC announced that it had sold 11.5 million shares at around 7 a.m., and a massive plunge began bringing the price from near 80 down to the 40s. The price action on Thursday was a combination of a couple of things. First, the news of new shares caught investors off guard, as the general assumption was that AMC had no new shares to sell. A week prior, 8.5 million shares were sold to Mudrick Capital, which they almost immediately dumped on the market. This caused the price to wobble but still go up. Fast forward to this last week, and a fresh 11.5 million shares made its way onto the market and sold for around $50. This caused the price to drop over $30 in a day. The situation created an opening for anyone bearish on the stock to go on the attack, and there was probably a significant amount of shorting done during this time. The stock rebounded but moved back into the 40s as much of the momentum that was started on Wednesday began to settle down. So where did these shares come from? Adam Aron came on Trey's Trades for a second interview to explain. In it, he revealed some important details on these shares. According to Aron, the 20 million shares sold over the last couple of weeks were shares that were originally set aside to give its executives as bonuses. So keep in mind that these shares were going to be added to the total pool regardless. Instead of just handing them to executives as bonuses, they instead gave up those bonuses as a way to raise capital for the company and put AMC's balance sheet in a stronger position. And we have to admit that it sounds bad to have more dilution in the middle of a major spike. But I'll also concede that executives at AMC gave up potentially millions of dollars in their own pockets to help strengthen their company. So the important takeaway is that these shares were going to be added to the total shares regardless, but executives gave up making money for themselves to instead try and put AMC in a better financial position. On Friday, Ortex data showed a negative 20% on short interest and that some shares on loan had been returned. Of course, the narrative became that the squeeze was over. And there is a bit to dissect here. Ortex's short interest data will reflect events that happened 2 days prior. If we look back to Wednesday, we saw a major spike, which probably correlates with someone covering their short position plus some gamma squeeze. The key detail is that this was a small number of shares that they were covering, and we saw a nearly 100% gain on that day. Imagine what the gains would have been like if 75% or more were forced to cover. 110 million shares were still on loan, with several of those still being sold short. So no, the squeeze isn't over unless retail suddenly gives up. What's more is the dishonesty in the media is out of control. Rich Greenfield doubled down on his AMC opinion and said that there was no short squeeze. He made this comment on Thursday after AMC just spiked 100%, presumably helped by a small short position being covered in an uptrend. So yes, obviously no squeeze to see here. Most retail AMC investors, though, believe that the official data is only the tip of the iceberg and that there are potentially millions of illegal short positions that are unaccounted for. This was discussed on CNBC's Fast Money by mistake. The hosts were attempting to downplay Trey Collins' outlook on AMC's future, but during that interview, they made a mistake which has since been removed from the episode. Reddit has been reignited after host Melissa Lee mentioned the words naked shorts while listening to her co-host.
Investing with an incentive to track momentum is what a lot of professionals do. So let's be clear. But in terms of looking at this as an us versus them, I'm sorry, I'm not buying into that. I think that's dangerous. And again, look, there's a lot of people, there are a lot of short sellers out there that have been borrowing stock they didn't have. In other words, yes, I think there are dynamics where retail investors can get caught. But it's really a dynamic where I think this is going after bad companies.
Now, most of Reddit is focused on Lee mentioning the taboo phrase. But really, the meat of the matter actually fell on Timothy Seymour, who admitted that shorts were probably borrowing shares that they did not have. Seymour laid out the very definition of naked shorting. These hosts are aware of what's going on in the market, so that analysis didn't come out of thin air. It further fuels the notion that there are a large amount of synthetic shares on AMC, and that will cause a spike to be even more violent. AMC as a company has about 50,000 shares left, so it basically has nothing left to dilute into the market. And the news media is finding it hard to keep talking technical analysis on AMC when they know at the end of the day that most retail investors don't care. The price action this week will probably continue to be highly volatile. Even big banks are stepping in and quietly limiting the ability to short these stocks. If institutions take away hedge funds' ammunition long enough, AMC and GameStop will run up quickly. Now, price action this week will be all over the place, as we may see a retracement back into the 30s for AMC, or after the CNBC fiasco, we may see a burst of buying starting on Monday. Regardless, the roller coaster will continue. But as always, I'm not a financial advisor. I'm just a regular guy with a regular job who would love to see AMC soar into the stratosphere this week. So always make sure that you do your own research and that you make financial decisions that you're comfortable with. If you're interested in investing, I'll leave you some links down in the description below that'll help get you started. Some of these are even offering free stocks when you sign up and make your first deposit. If you like this video and you want more like it, make sure that you subscribe to the channel. I post every Sunday and Thursday unless I throw in a bonus. Naked shorts, yeah. And thanks so much for being here, and I'll see you in the next one.